Hi, nice to be with you again. Thanks for coming and checking in on our Market Minute, which gives you a little bit of an update of what our thinking is about the U.S. financial markets and the economy and what we might be doing in portfolios. These have been really tricky times. The last time we talked about the very significant, severe, sharp corrections, decline in stock prices that occurred in January and early February, and then thankfully the recovery from those prices that were very, very low and undervalued. But the good news on the recovery is that it recovered. The bad news is that we got back to a level which we would call overvalued, or certainly no better than fairly valued. In other words, the opportunities in the markets started to really go away as we recovered in prices. It's very hard under current conditions to make the case for a really great market between now and the end of 2016 and say the end of 2017. A lot of it's going to depend on earnings. Earnings, as I think everybody who follows us knows, that earnings were pretty dismal in the first quarter for U.S. companies. The U.S. economy did not do well in the first quarter. It was only up or expanding at an annual rate of 0.5%, which is dismal. And as a result of that, we started to see companies pull back on not only their investment in technology, and that's showing up in the technology stocks, but also their employment. You saw perhaps saw the April employment numbers where we only added 160,000 jobs to payrolls. That happens when U.S. companies are not making a lot of money, and also we're getting to full employment. So you just have to describe the current situation as lackluster, lusterless, hard to make the case for anything really positive and really exciting from this point through the end of 2016 and 17. The real key to this is going to be obviously the U.S. economy and profits. There are two things that could really help profits for the remainder of this year and 2017. One is a decline in the dollar, and we've already seen a fairly significant decline in the dollar, which is good for U.S. multinational companies that are trying to do business in other parts of the world. So that could be really helpful. And the other thing that could be helpful, and we're already seeing it, is a rise in the price of oil to the levels that we thought were equilibrium levels or more justified by global supply and demand conditions, about $47 per barrel. Then we're going to see less drag on earnings from energy companies, and we're going to see, again, as I mentioned, multinationals do pretty well. So this might turn out to be better than we currently are expecting or forecasting, and we certainly cross our fingers and hope for that to be the case. Obviously, we have to be on our toes now, and we are. We have to be on our toes, if for no other reason than this has been a very long bull market. It hasn't been as long as three other bull markets in the post-war period, but it's pretty close to them. So we have to be on our toes looking for those signs that signal or tell us that the bull market is ending and a bear market is going to follow, and that might be accompanied by a recession. We don't see that in the numbers yet, but we're watching these numbers very carefully, and obviously what we want to do is reduce your exposure to equities if indeed we do see those signals that tell us bear market's upon us and there's going to be a recession. We don't, I emphasize, don't see that, at least today in those numbers, but we're watching every day. Really appreciate the confidence you've shown in us. We're working really hard to do a good job for you, to help you reach your investment objectives. This is a good group of people. Please feel free to call me or any other person that works at Hugh Johnson Advisors. We'd be happy to talk to you. Look forward to talking to you about what's going on in the world economy as well as in your portfolios. So once again, thanks for your confidence. We look forward to hearing from you and look forward to visiting with you again on this Market Minute in about a month's time. Thank you very much.